Alright, what's up everyone? Welcome back, and if it's your first time here, I definitely hope you stick around. So what we're going to do right now is we're going to go through the markets today and see what the price action's telling us, see what the key levels are, and if there's any bullish or bearish edge on the charts. We'll take a look at the daily and the 4-hour. So let's hop on in. Alright, so on Tuesday, the S&P finished up 0.87%, the Nasdaq finished up 1.45%, the Russell finished up 1.5%, and the Dow finished up 0.17%. Alright, so looking at the S&P today, we still have this potential bearish shark pattern here with the pattern completion zone at 40.58. At highest prices today, you're at 40.28, so not quite hitting it yet. You could finish out this pattern in the next couple of days, or you could start to see some selling pressure come in. You see you have higher volume today at a potential spinning top at the top of a range here. Let's see what the next couple days bring. As of now, you're still in the bullish control zone on your RSI, positive momentum continuing to build on your MACD. Taking a look at the 4-hour on the S&P, you still have this hidden bullish divergence that played out, ushered in a nice wave up, and you have just bullish convergence from your one high to your higher high, one high, higher high on momentum. You are in the bullish control zone still on the 4-hour. You could be just consolidating here because you'll notice here on this 4-hour candle, you bearishly engulfed this previous 4-hour candle. And what was the follow through? Nothing. There was none. So could this be a form of a consolidation pattern where you're just flagging in this range, then see the markup to hit the next level? Possibly. We'll have to see what the next couple days bring. So just looking at the Dow Jones on the daily, you have actually achieved an 886 retracement from your swing high to low, which would be a value perceived area for shorts to take a shot and have a stop marginally above this level of inflection, where we spoke about last week, where you had this potential hanging man candle, which traders settled up outside of the level of inflection to where in between this zone, straight up, straight down, straight up, you would presume. Unfortunately, you weren't able to hold it. You did see follow through from your hanging man, which also looks like a potential shooting star at the top of a range, followed by another daily potentially spinning top at an 886. I would not be surprised if you did see a reversal in this area. Typically between here and here, these levels of inflection, you reversed. Different this time, we'll have to see. You do have some bearish divergence on your RSI. You do have some bearish divergence on your MACD. It's a little bit cleaner of bearish divergence on your 4-hour, which we'll get into. So looking at the 4-hour, it's very evident from your one high to your higher high. You have high on momentum, followed by lower high on momentum, and you're now seeing your first negative red impression on your new MACD histogram island, which you do have triple bearish divergence on your RSI. However, you still are in the bullish control zone, and you are in this level of inflection where you could be just consolidating, but just looking at what price action's doing. On your 4-hour, you bearishly engulfed your breakout with follow through, and now you're just catching bids, but you're kind of just in this middle of the inflection zone. You either need to get out of it and where we could see the next level, or if you break down below, look to retest this trend line here from the down sloping parallel channel, or the next level of inflection at 32,047. Looking at the Russell on the daily, we were talking about just the other day where we wouldn't be surprised to see traders take profit. And what happened? Traders took profit at a profit-taking level. You've achieved the 618 from your previous swing high to low. You are building positive momentum on your MACD. You are in the bullish control zone. And this is what I was talking about. When you see positive momentum begin to wane and you're about to print your negative impression on your histogram island, you just start building positive momentum again. And that's what you're currently doing here. Instead of going negative, you're seeing follow through back to the upside. If this bullish trend wants to continue, your next profit taking level would be the 786 from this swing high to low, which also is confluent with a level of inflection of support and resistance. Also, taking a look at the 4-hour on the Russell, you're attempting to break out of this supply line here. Unfortunately, you haven't done it with enough up thrust as of yet, because you're still working on bearish divergence, which is very clear from one histogram island to the next. Not fully matured yet, but you are losing positive momentum as it does begin to wane. And you do have bearish divergence on your RSI from your one high to your higher high, one high, lower high on momentum. And you have that on both oscillators. Again, you're still in the profit taking zone. If this bearish divergence wants to play out, you'll look to retest the 200, possibly any gaps below. So just be cautious and manage risk appropriately. So looking at the Nasdaq on the daily, you actually did break this supply line here, and you've also back tested it in the same day. However, you did close with a red candle. We'll have to see what tomorrow brings, what the follow through is, but as it stands right now, you're building positive momentum on your MACD. You are in the bullish control zone on your RSI, and you are breaking the supply line from the downsloping parallel channel. Tomorrow you could just hop right back into it, gap down, retest these levels, close the gap. We'll have to see what's going on, but as far as it stands, you have a breakout and you are doing bullish things for the moment on the daily. Let's take a look at the 4-hour. So looking at the 4-hour, you are seeing a form of bullish convergence from one high to the next high, a higher high, positive momentum, one high, higher high, and positive momentum. You are still in the bullish control zone on your RSI. However, your MACD is beginning to wane its positive momentum. We'll have to see if there's any more follow through. But this bearish engulfing candle from the 14th on Monday, there was no follow through to the downside. You've gapped up close to the 200 simple moving average, closed the gap, and then rallied some, kind of an indecision candle in the middle of a range, straight up, straight down. We were thinking straight up in time. Looking at the dollar on the daily, so it does look like a potential hammer candle at the bottom of a range. It looks like you're finding support from these previous peaks and valleys here. You have held, traders even had a candle close at this level, but looking at the wick, you sold off intraday to 105.38. We're thinking 104.84 in time, testing the 200 simple moving average and the previous resistance support zone. So we'll have to see if there's any more follow through. Negative momentum continuing to build, and you are in the bearish control zone on your RSI. One thing that is interesting on your 4-hour DXY is this potential bullish divergence from one low to a lower low, one low, higher low at the oversold inflection area on your RSI as you are pointing back up. However, you still are in the bearish control zone, but this is a nice positive development for the DXY. If you're looking to go long, you would be having a stop marginally below 106.057 would be your hard stop out, and we'll see if we can catch any follow through. You do have positive momentum building on your 4-hour, and you are seeing higher highs bar over bar locally. Could this be a potential bear flag on a smaller time frame? Maybe, but anything less than the 4-hour or the daily is just a scrub time frame, so not interested in that. Taking a look at the VIX on the daily. Wow, congratulations. Well, you almost did it. You almost bearishly back tested your 200 simple moving average on the daily once again. You can see here you back tested it once, twice, thrice, 4 times, and this would have made a 5th time bearishly back testing it as resistance. We didn't do that, however. We did test 2609, bearishly back tested as resistance still. We did close back in this demand line, however, and you do see your negative momentum continuing to wane, approaching positive, potentially bullish divergence from one low to your lower low. You see a higher low on momentum. You are still in the bearish control zone, however. Let's see what follow through there is. Let's also take a look at the 4-hour. So your 4-hour did have bullish convergence. You see from your low to your lower low, low, higher low on momentum. You are building positive impressions on your MACD. However, you are being rejected on your RSI in neutral, which could be a form of bearish divergence, one high to the next high. You'll see you actually one high, lower high, one high, higher high. And you have been rejected at this level and rejected at the 200, and you're being rejected at the level of inflection at both zones. Let's see if we can hold this demand line, and if there's any more follow through to the up or downside, but just know your levels. Back above 2609, bullish. Back below 2486, bearish. Taking a look at USOIL on the daily, we do see your bearish divergence from one peak to your same peak is playing out still. Negative momentum continuing to build. However, your RSI is in neutral. You potentially, if pivoted here, are putting in a higher low from this low here, and we want to look to get back above 90.70 to continue to be bullish. But just looking at this momentum shifting structure, a potential inverse head and shoulders has been not able to break the neckline. You think you would have seen follow through at this point and seen prices back at 100 if you were going to do it already. You just haven't. And if you look back from Monday the 14th, you printed a beautiful bearish engulfing candle. You haven't seen any follow through yet, but what else? You also haven't invalidated it yet by getting a candle close back above 88.95. Let's see what the next couple of days bring, but this seems to be not finished playing out. Let's see if we can retest the bottom of the range here around 83.05. I think the 4-hour on oil is a little more telling. You do see some from one low to your lower low, one low, higher low. This is bullish divergence on your 4-hour on both oscillators. Let's go ahead and mark that down. So this is a great development on a smaller time frame. You have bullish divergence not on one but two oscillators. Unfortunately, what you're doing is confirming the 200 simple moving average as resistance. We'll have to see if we can get back above it, and what you want to do is break the neckline and break 90.70 to confirm. You did it once, but a failed breakout has consequences, and that's where we are. Let's see if we can get any follow through from this bullish divergence and get back above these important levels. All right, so taking a look at gold, you are a bit overextended on your RSI. You are starting to see positive momentum beginning to wane on your MACD. You are just in the middle of this inflection zone here. You could see the top of this inflection zone and then sell off, which would also potentially be another double top like we just saw in oil. We'll have to see if there's any follow through to the upside, but let's see where we are just based on your swing high to low. Who would have guessed? You came up, price tagged your 886, reversed, and we're starting to see negative selling pressures like we always talk about. The 886 is a value perceived area. In this example, it's a value perceived area for shorts because price has retraced 88% from its previous swing high to low. This is where traders would be taking profits and shorts would be stepping in. And if you were short, you'd want to have your stop marginally above 1793. Let's look for follow through to the downside, and if you break 1747, look for the next level of inflection down at 1685. Looking at silver on the daily, your hidden bullish divergence played out, created a nice up thrust up again. You got back above the critical key level of 2168, back above your 200 simple moving average. However, you are pointing down on your RSI, but you are in the bullish control zone, and your MACD is now beginning to wane on positive momentum. You did just put in a bearish engulfing candle at a level of inflection, but you did back test the 200 simple moving average as support once, twice, 3 times. Let's see if we can hold, get back above 2168. If not, in between this level, I think you're going straight back down to 19,846. Let's see if we can get some follow through on price to the downside, or if we hold these levels. So looking at Apple on the daily, it's like we always talk about the level of inflection. What'd you do? As soon as we came back down, buyers defended this level, price up thrust up to the next level, and what happened? Traders are taking profit at 151.93. You can see this is a clear level. We were unable to close inside of it. We're back in between the range here. Let's look for follow through to the downside. But as it stands on the daily, you do have this bullish divergence from one low to the next. You are seeing positive momentum build on your MACD. You are in the bullish control zone on your RSI. However, you are seeing increasing volume on selling pressure. Let's take a look at the 4-hour. So when we are looking at the 4-hour, I think it comes a little bit more clear to where you potentially are putting in one high, a lower high being rejected at the level of inflection and the 200 simple moving average, all the while creating bearish divergence from one high, lower high, one high, higher high on positive momentum. I'll look for more follow through to the downside, and if this can't get back above 151.93, you'll likely see the bottom of the range once again at 138.02. So taking a look at Tesla on the daily, you are seeing higher prices Monday and Tuesday, but unfortunately you haven't been able to break above the previous high from Friday the 11th. You are having bullish divergence on your MACD from one low to your lower low, one low, higher low on momentum. You do have hidden bullish divergence from one low to the next low with the same levels of negative momentum. However, you are still in the bearish control zone on your RSI. And what's something that could happen on your MACD is as you are waning on positive momentum and you think you're about to see green impressions, you could immediately start to build negative momentum once again. So we'll have to look for that as we go through. But typically between this range of straight up, straight down, straight up, straight down, straight up, straight down, we're thinking why not straight up again to retest 209.07, bearishly back test for the next leg down. We'll have to see. Taking a look at Amazon on the daily, another straight up, straight down situation that we've been talking about. In between your level of 81.45 and 101.80, it's straight up, straight down, straight up, straight down, straight up. We're thinking straight down again in time, and this is what we're just talking about on Tesla potentially coming back up to bearishly back test the upper range. We'll look for follow through now. You are seeing bearish convergence on your MACD, bearish convergence on your RSI, one low, lower low, one low, lower low, in the same on your RSI. You are in the bearish control zone. However, you are seeing positive momentum continuing to build, but just back testing this level of 101.80 and selling off and not being able to get a candle close above, a little concerning. We'll have to see what the next few days usher in, but you're doing this all on higher volume from your previous trading day. Looking at Google on the daily, we have this beautiful bear flag that's played out. You did see the bottom of the level of inflection here, where we were talking about it's not about the bearish breakdown itself, it's about the follow through. And what was the follow through? We got back in between this level, we saw the top of the level, and now we're heading up to the next level, which would be 189. You haven't quite achieved it yet, but if we're just looking locally, you can always do your fib retrace from your previous swing high to low, and you're about a 786. A nice, more value perceived area for shorts would be the 886 around 102. Imagine you come back up here and close the gap. That's a nice potential entry for a short, where you could strategically place your stop loss right above this candle high close at 104. That's something I would look for, is a gap fill, and then that's where I would look to go short. Something I brought up on the weekly recap was Netflix. I think you are going to do it this week. We'll have to see, but you did have this hidden bullish divergence from one low to your higher low. You did have bullish convergence from your one low to your next low, and you're now printing a green impression on your new MACD histogram island, where in time we're thinking you're going to come up here and close the gap at the candle close around 333. Let's look for more follow through to the upside, and that's where one would be taking profits. All right, everybody, thank you so much for going through the markets with me. I want to kind of keep this one a little shorter, and if there was anything you didn't see that you want to see, please let me know. Leave a comment below, send me a message, and I'll add it to the show as I go forward. And if you like what you saw, please hit that bell, that like, that sub. You'll be notified anytime I post a new video. And until next time, thank you so much.